Now, we here at Walk of Wealth, we have been investing heavily in Houston. In fact, we've done over $100 million worth of transactions just in the last 2 years alone. And there's good reason for that. In today's video, we're gonna break down things that we look for from a macroeconomic view in markets that we invest in. There's a reason that we are so bullish on Houston. I thought it would be important for me to share what things I look at when we want to invest in certain markets and submarkets. Now, according to Peter Zeihan of Geopolitics, who's a well-renowned author and thought leader, he says Houston has the brightest future for the next 30 years. Houston, which was 15 years ago the 5th largest city in the United States, is now the 3rd largest city in the United States by population. It is the energy hub of the United States. And I'm not just talking about producing oil. I'm talking about producing, transporting, and shipping crude. If you want gasoline, jet fuel, diesel, any of these products, chances are it came from Houston. Let's talk about petrochemicals. More than all of the natural gas that we're getting from all the refineries, Houston is also the largest petrochemical system in the United States. So when you think of things like makeup, tires, batteries, plastics, chances are it started in Houston. In fact, we are seeing heavy machinery moving into the city, and these machines will produce and convert these intermediate products into things that we use every day. That's where we enter manufactured goods in Houston. Houston is part of the Texas Triangle. The Texas Triangle is the largest manufacturing hub in the United States. And the fact that Houston is the most populous city within the Texas Triangle puts them into heavy machinery, heavy equipment, anything that makes big chunks of metal. It is the 2nd largest source of big machinery. So when you think of things that are made to make other things like assembly lines, cranes, etc., they came from either Germany or from Houston. Germany was the biggest producer, Houston was number 2. But now Germany is having a whole bunch of its factories shut down because of the war in Ukraine. And now as a result, everything is Houston, Houston, Houston. And last, I want to talk about food. If you eat, it is the number 1 producer of agricultural products, and also food processing is done in Houston. And of all of these things that we talked about, manufactured goods, petrochemicals, food, refined products, are things that are going to be in short demand in the entire world from now on, which positions Houston very favorably. Any location that already has the physical infrastructure in place, the machinery in place, that will get to participate in all of these markets, not just nationally, but globally, will make enormous amounts of money. So any location that has the physical infrastructure, knowledge, know-how, that will get to participate in all of these things is going to make an enormous amount of money. Why? Because not only are they going to be supplying the needs of just their national economy, the country within the United States, but also globally. So any location that has the physical infrastructure, knowledge, systems that are already in place to compete in these industries is going to make mad money. Why? Because now they're not only serving their national United States economy, but global economies where demand is starving. The globe is starving for these products. And this is why Peter Zeihan believes that Houston is going to be the global metro that is going to do best in absolute terms for the next 30 years. Now, why is this information important for real estate investors? Well, that tells us, number 1, that there's multiple diverse industry. Petrochemicals, food, agricultural products, oil, gas, all of these type of industries. We have multiple industries, multiple sectors. So employment is not dependent on just one thing, right? If you're in a city where it's a college town and the entire population is based around the college closes, then the jobs and the people and everybody leaves. Whereas if you have diverse labor, then you're not dependent on just one sector. So even if one sector's down in an economy, other sectors will buoy it up. So why is that important? Now, if we have multiple sectors, that decreases risk. And now Houston has a bunch of industries that will continue to have huge levels of demand. And as a result, when there's companies doing well, guess what follows? Jobs. So now people move in droves to these areas. And we're seeing Texas and Florida are the two fastest growing states in the country. Low state income taxes, business-friendly environment, etc. There's a lot of reasons for it, but jobs is the driver and populations follow jobs. Now, why is this important for real estate investor? I think you're already starting to put it together because we know that affordable housing in the country, we have a scarcity of it, but in Houston, it's even getting more scarce because we have more people coming in, working people that are competing for a scarce resource called affordable housing. And what this does is it puts upward pressure on rents, which puts upward pressure on profits for investors. So now if you are positioning your investment in a place where lots of people are moving and there's lots of jobs, this greatly decreases the risk, greatly increases the chance of being profitable. And that's why we invest in places like Houston versus somewhere else where we can get, like maybe Arkansas, where we can get cap rates of 9%. But you're not gonna get the upside. You're not gonna get huge rent growth like you're going to get in markets like Houston. Hope that helped, guys. In the next video, we're gonna break down another city from a macroeconomic level.